Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss COVID-19 recovery, growth, and whether we get too much that comes with inflation that can work against valuations in stocks. And Phil, we spoke about this last week, and the issue is bonds are telegraphing a quicker recovery than the data the Fed uses, and that's creating some volatility in the market.
Yeah, that's right. I mean, if you look at global bond returns, there's a lot of negatives lately because rates have been rising, which means the bond portfolios themselves are being sold off. So the bond market is saying we're a little bit more worried about inflation than the Fed speakers have been the last week or two. They've been very, sternly fixed on their message that inflation hasn't been a problem for years. It's not even close to the levels that they normally would target, and they want to target that as an average now. So they're willing to accept inflation going over that 2% level for a period of time. So there's definitely a kind of dichotomy in terms of what the market looks like they're pricing in and what the Fed is expecting to have to do. There's a lot of arguments to say inflation won't pick up as aggressively. The fact that we have so many people still looking for work, we have a lot of people in the services sector who would love to go back to work when that demand picks up. And global trade, which was a deflationary impact in the past, should still be there. Technology, which is deflationary, should still be there. And that's why a lot of people who don't believe we're going to get strong inflation think that that's still probable. But the market is, tossing around the risk that we do have higher inflation now. And if you look at the data on returns when bond prices rally, you actually do tend to see that the markets sell off as rates go up. Sorry.
Well, let's catch up on vaccination progress, which is also lending to the story bonds are trying to tell. We got some very encouraging news out of the Biden administration yesterday.
Yeah, we're expecting with the J&J approval and Merck moving in to actually help produce that vaccine, we should have enough vaccines for all American adults by May. And that's a huge achievement compared to what we're talking about sort of 8-9 months ago when we were wondering if we would have any successful vaccines at all. So we look at the progress. We had a little bit of a dip in vaccinations the last couple of weeks just because of the snowstorms that swept across so much of the US, just making it really hard for people to get out to get the vaccinations and to distribute the new vaccinations. But that's picked back up. We're back to about 2 million vaccinations a day. And if you look at the statistics, around about 25% of people, at least soon, will have at least had one shot. So that plus all the people that have already had COVID, we're getting close to having sort of 50% of people with some antibodies in their system, so to speak.
And Phil, finally, the last chart shows the timing of stimulus checks and how that coincides with an increase in retail trading. And this is something that we spoke about the first round as well.
Yeah, so I mean, obviously retail trading has been something that a lot of people have been talking about. It's increased really dramatically since we went to commission free, which was late 2019. But if you look at some of the statistics, looking at average daily trades, you can see the data shows a pickup right around April when the first checks went out, and then right around January when the second stimulus checks went out. So it sort of speaks to the fact that maybe these stimulus checks are being invested, hopefully invested sensibly into the stock market. There's been other reports that a lot of new entrants into the stock market are coming in. So the stimulus checks are reaching down to households that weren't previously in equity markets. So that's good because equities tend to outperform houses and outperform bonds over the long term. But it is quite phenomenal to see just how much bigger impact retail has on equity trading in the US now versus just 2 years ago.
All right, Phil, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.